This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hi, Cheryl. Thanks for joining.
Good morning.
Morning. Yes, good to catch up with you guys.
Morning.
Morning. Thanks for joining. So looking forward to learning more about Torrigan. I got the deck and so forth, and glad to tell you about 10 Capital. Where would you like to start?
Why don't you tell us about 10 Capital first?
Sure. So at heart, we're investor relations and introductions. We help you find more investors. I'm a part of the Keiretsu program. We're actually standing up Keiretsu here in Texas. So we deal with quite a few investors in the life science space and have done so for many years. We've been doing this for about 12 years now. We originally started as Texas Entrepreneurs Network because I started 3 angel networks here, one in Austin, the one in Waco, and the one in Williamson County. And then started this company under the name Texas Entrepreneurs Network to help connect investors to startups, and then expanded into venture capital in the 2010 to 15. And then had a whole bunch of family offices come in 2016, then went national with our program in 2017. And that's when we changed the name to 10 Capital. And at heart, what we do is take your deck, go out to our network, create an initial list of interested people. There's anywhere from 200 to 1,000 that are initially interested in the deal. And then we go through and have you pitch to them in our online events. We do 5 a month right now. And then we're launching a hybrid series this year where we're going out and pitching in person in 10, 12 cities once a month to get back in person because we're seeing the shift in the market back to that. We're a monthly retainer. It's $3,000 a month for a 3-month commitment. And after that, it goes month to month. It just depends upon where we're brought in and how far we have to go. If you're raising $500,000, you can usually do that in 3 months. If you're raising $5 million, that's more like 5 to 9 months in today's market. But the life sciences are doing very well in the market these days. We see a lot of interest in the biotech and then AI. Those are the 2 things that are very hot right now. And the market is turning up. We are seeing much more interest coming up now that the interest rates increases are closing and we're getting to the next level there. But we do have experience with the FDA path companies, and most of them that come to us are at the seed, pre-seed level, pre-IND. And so we're usually dealing with the angels and the family offices, not the venture capital. We seem to be a little bit too early for that. So I looked at your deck, had some questions and comments about it, but that's how we work. What questions do you have for me?
Questions at the moment, I guess. Do you want to go through your questions on the deck, or do you want us to introduce ourselves? What would be most helpful?
Give me just a little bit of color on your deal as well. Then we'll look at the deck and talk about it. Primarily interested in the FDA path, interested in the fundraise itself and the structuring of it, and then looking to see where we are with the process of accomplishing that current raise.
Yeah, so we're currently doing a bridge round to our Series A in a convertible note for up to $2 million. We have a call later today. We'll kind of find out where we stand, but we might be about halfway through that at this point. And then our next round is a Series A. A year ago, when we started thinking about this process, we were thinking in the $40 million range. But with the market the way that it was in 23, we brought that number down to 15 million because it allows us to hit a couple of milestones. Essentially, it allows us to complete our phase 1 trial and be ready to start our phase 2 trial. But we're kind of rethinking that at the moment and wondering whether we should try to do the larger Series A because it allows us to go faster and complete more of our clinical trial.
What valuation did you put on the $2 million convertible note?
There is no valuation. It's a 40% discount to the next. It was a 20% discount to the next round, but it's a 40% discount to the next round.
How's that going? How much have you raised of it?
About half.
Okay. All right. That's half more than I thought you would have. But anyway, without a valuation cap, it can be really tough out there, but maybe 40% is actually effective. What would you put on the Series A?
Probably about 40 million pre-money.
What was your last price round?
Was 30 million post-money.
Okay. So 40 million pre-money. Okay. And what FDA path are you on?
So we're a small molecule. We've actually received guidelines already on our pathway with the FDA. We are currently in a phase 1 trial with our first generation compound. So next we will be doing a bridging study with our second generation compound. That's actually the first generation is a racemic compound and the second generation is an enantiomer. So it's 50-50 mix of the current racemic. It's 50% of the current racemic. So this is why the FDA gave us guidelines to do a bridging study, which will be very short, very few patients. So it's essentially another phase 1 study, but for the second generation compound. And then we will be going to a phase 2 study with the second generation compound that's also in 2 parts. A 2A where we test 2 different doses of the second generation compound and then pick the winning dose. And the part 2 will be that winning dose with Keytruda against a second arm that's standard of care. So our current phase 1 study with our first generation compound is also in 2 parts. Part 1 is 5 escalating doses of our compound itself, and part 2 is 5 escalating doses of our compound combined with a constant dose of Keytruda, which is the only immunotherapy approved for HPV-induced head and neck cancer. So the FDA actually accelerated part 2 and told us we don't have to do them consecutively when the first 2 cohorts of part 1, by our drug by itself, is deemed safe, which we just press released that last week that it is deemed safe. We can start cohort 3 of part 1, but also level 1 of part 2, combining our first generation drug with Keytruda. So we will be done with this phase 1 trial by the end of September at the latest. So it's a very fast study. We've not had trouble enrolling at all. In fact, we've had to institute a reservation system for patients. MD Anderson is our lead site and our principal investigators there. We also have Mount Sinai in New York, City of Hope in California, and then Yale and UCSD will be onboarded shortly. But those first 3 sites are already enrolling patients and reserving. So we literally have a line 10 patients deep wanting to get into our study because our cohort size is very small, just 3 patients per cohort in part 1 and 3 patients per level in part 2. That's all the FDA required, of this racemic drug because it's proven safety in humans. It's actually a generic medication for a different indication.
Okay.
So we've had a very easy time and have already gotten a safety signal for phase 1.
Okay. No, that's a very clear path. And I think that's part of what you have to communicate in the slide deck is the FDA path that we're on and each phase of it, and each phase for each trial maps to one portion of the fundraise. So there's a clear set of milestones. It's real simple to look at and see what goes to what. There's a lot of detail there, but you can do a high level simplified version that would get it across. And what we'd like to do is break the fundraise down. If we're going after, say, 40 million, let's say we put that back on the table, we would do the first 5 million with a very low valuation, say $30 million. We do the next 15 million at a 35 million, and then we do the remaining 20 million on a $40 million valuation. But by putting out the big 40, you show we're raising enough money to get to where we need to go. But if you want to have a good price, you incentivize people to come in up front by giving very nice valuations on the first round. It's always the hardest one to do, and then stair step it up. The VC comes along, it takes the whole thing off the table. That's usually going to be a different negotiation with the lead investor. But we find we're spending a lot of time with convertible notes to get to the lead investor, at least in the round 1 of these things. Round 2, the lead investor often shows up. But the idea is to break the trials down into one of those 3 buckets. So it's real clear this trial goes to this bucket for this money. So it's very simple to understand what it is. And as you conclude that trial, that justifies going to the next valuation step up. And so it makes it easy to go. And so those who think it's only worth 30 million, well, they have an opportunity to get in for 30 million. For those who think they really just don't want to take the risk, well, we'll wait till they get to the 3rd phase and we don't mind getting a $40 million valuation. But that's one way to go about it, is to structure in a way that incentivizes people to come in early for those who want to have a better price. And when we get 2/3 of the way through that raise, we then declare we're closing in 6 to 8 weeks. Who wants to be in? And then we talk about the interest and committed that are floating around the top of the funnel, which can be a substantial number of dollars in today's market. And just to show that there's other people interested in the deals, first come, first serve. So there's ways you can structure it so people can move through more quickly. Our investors have a hard time with no valuation cap. They really want a valuation cap on it. So if we were to put a 30 on it, for example, the last price round, that would give them some comfort to come in at then 10, 15% discount rate, something like that. So, or you can put it as part of this, finish out the convertible note and start the Series A fresh in January and start off with maybe a $5 million smallish type raise, but at a very good valuation. So once you have that first round closed, it gives you momentum to close the second and third round. And hopefully the trials are going well. So you're moving through that process at the same time. The market is looking to turn up. I see a lot of interest, a lot of investors coming back to the table. Interest rate hikes seem to be over. We're getting back to a more standard economy. And so it looks like there's a lot of movement in the investors today, or for the spring it will be. So that's one thing to do. On the deck, we'd probably redesign it a little bit. You have good content, but it's a little hard to read. It's a little hard to figure out. There's a lot of detail there, and you have to kind of parse through it a little bit. But that's part of what we do. There's no cost for that. And so that's how we go about changing the deck a little bit, is with the deal structure and with a little bit clearer graphics on how those different things line up. Because what investors like to see is the full FDA path from here to the approval. What does that look like? What are the key milestones? And then map the fundraise onto it. And if you have additional fundraising, some sense of what scale that would be, because people are trying to figure out from here to the exit, what would that look like? Are you trying to exit at approval or somewhere through clinical 1 or 2?
Well, our phase 2 trial may be a pivotal trial because since this is oncology, currently 85% of patients do not respond to Keytruda that have HPV-induced head and neck cancer. And that's the only immunotherapy approved for them. They don't respond to chemo. They've had resection, radiation. They're at the end of the line as far as treatment choices, unfortunately. So, if we can show, we have a very low bar to show efficacy because Keytruda only has the 15% overall response rate. So even if we doubled that, that would be way positive on the efficacy scale. And that means our phase 2 may end up being a pivotal study for approval. For filing an NDA, we may not have to do a phase 3, but time will tell. We're very confident that we're going to meet the safety endpoints for phase 1 in the bridging study. So that means really it's phase 2 where it's at for us.
Okay. So it would help to have, if we were to look at phase 2 as the exit point, once you complete phase 2, you could exit. We'd have a slide in there that would talk about who might want to buy you for what valuation. And that really can help justify these valuations we're putting down now. I didn't see any exit valuations, so it's hard to get a sense of how do we justify 40. Well, if you have a $1.2 billion exit value at phase 2, well, 40 starts to look like a good deal. So that helps sell it a little bit there as well. Have you ever gone through Keiretsu or any of the other angel groups that are out there?
We went through US Angels and paid them a couple of fees and got absolutely zero investments. In fact, all we got was meetings where people wanted to sell us their services.
Okay, cool. Any other questions for me about what we do? I can send you more detail about how we work and send you a proposal, campaign, outline who we've worked with before and all those good things.
I think that would be helpful.
Okay, great. Well, I appreciate you guys taking time. I'll send that over and we'll go from there. If you have any questions, I'm happy to jump back on a Zoom to dig into a deal structure or anything like that as well.
Thank you.
Great. Thank you.
Thanks.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.